morning, everybody. This is Scott. Welcome to the New York Session Live Training Room. Don't forget that trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, your level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest any money that you cannot afford to lose. Be aware of all the risks associated with foreign exchange trading and seek the advice of an independent financial advisor if you have any doubts. So, welcome to the best live trading room in the Forex, bar none. All you got to do is ask our traders. So, a couple things you need to know. Forex Target Trading LLC is the educational part of our business model. It's the methodology that we use. ProAct Traders LLC is the technology part of our business. It's the software that we use. So we combine the methodology with the ProAct charting software to create our results. And our results are taken from actual traders using the combination above and then averaged for our pip capture. Now, since many traders take only 2 or 3 of them and other people may take 2 or 3, it's virtually impossible for you to match our record unless you took every single trade and you never slept and you traded every single market, all 3 markets. So don't think that you can match the record. It's just a running total. So in other words, this is our trader's record, not my record. My record doesn't count. Your record is what counts. Things to know. We are training setups, not trades. Any decision to take a trade is yours. We are training what an RF1010 or a 6 aces trade setup looks like in a live trading environment, not after the fact. So I may say this is a valid RF1010 setup. Enter when ready. That is a trade setup, but it's not yet a trade. You, emphasis is on you, you still have to look for T30s, any previous support or resistance, any fib barriers that are in the way today. You must assess the risk and reward. You must know the target and you must know the stop loss. If you don't know the target and you don't know the stop loss, you are not a trader. You are a gambler. Wait for a hook or a center, and if everything is right, then you make the decision to take the trade, not me. So stops are always going to be the technical stop. We may say the stop's around 110.12. You must use the technical stop, which is the last support or resistance, depending on your direction, plus 5 to 7 pips on a number that ends in a 3 or a 7. So in this case, it must be 110.13 or 110.17. We also never use a 5 because 5 is used often in option contracts. Stop should be moved to break even after 17 to 21 pips, depending on the real estate of the day. So in other words, it's not automatic. At 17 to 21 pips, you look and see if you might be able to move your stop. Anything spoken of in the room is an opinion, not a trade call. Everybody in the world is entitled to their opinion, including me, but my opinion is not a trade call. This is not a trade room. It's a training room. But we do make documented pips in here, and we are here to teach you to fish, not give you a fish. We're training how to use our methodology combined with the ProAct charting software to its full advantage as a service to our live room subscribers. So, I want to welcome our demo traders here. Anybody here on a one-day pass, we're glad you're here. Hopefully you see some things you like. I think you're going to find out pretty quickly that we are a big Forex family, and everybody here is helping everybody to get better. Okay. We are Forex target traders. That means many trading opportunities we identify are not entered during the New York session, but they may fulfill in subsequent sessions. That does not change the trading opportunity. So we will also do a heads up after the session that is recorded. We do that every day except Friday because there is no session after Friday in New York. If you're a demo trader, you must pay special attention during that recording. Live room subscribers have the ability to review that recording, but you do not. Live room subscribers also get chart alerts if we see anything later, but this just means go look at the charts, since these will not be trade setups, just things to watch for. They look like this, and they do have stops and limits, but these are sent out anywhere from 3 to 12 hours ahead of the market. So it's just a starting point for you in the wide open space and to see if the real estate still holds up and whether these numbers are still good. Now, any alerts either talked about verbally or sent to live room subscribers are for educational purposes only. This is not a trade signal calling system of business. Please use your real name. We don't like to use fake names or my big fat FX. It doesn't work for us. No swearing in the room, no sound. You just log out and log back in. It's an internet issue on your end, not on our end. There are no dumb questions in here, and all ProAct live sessions are recorded. So anytime we're live, it's being recorded. Now, it's not about trading every day. It's about trading that one right day. You make money by waiting, not by trading. Sounds so silly, nobody wants to believe it, but it's true. The one trade you're going to learn in here is the wait trade. We wait for our trade to come to us. So I'm going to look at the RF1010 trade setup now, so pay attention. This is a trade setup we look for every session. It's the first momentum move of the session. Could go 25 to 30 pips on initial thrust, and it could end up going 80 or 90 by the time it's all over. Alright, so we're looking to make a buy here, and it's found in the RF1010. It's called the RF1010 because it's found in the Royal Flush template. That's the RF part, and we use the two 10-minute charts. That means that the 60-minute gatekeeper here is not part of this setup. So we're looking for a buy on the euro. How do we get into that? First thing that has to happen is our gatekeeper has to set up. Alright, so what are we looking for? First thing is a blackjack. That's that black candle down there. Nothing magical about it. Hits the moving average. We turn it black so we can find it, but we ask that candle to tell us what direction is the money coming in. It puts a green diamond on the bottom, so it says the money's coming in a buy. We're interested because we're looking for a buy. Next thing we need is the moving average to be green because we're looking for a buy. Next thing we need is candles above that moving average because we're looking for a buy. And finally, we need the momentum indicator called the HMI. We need it to turn from red or black to green because we're looking for a buy. All right, as you can see, that didn't happen. So we have to wait a couple of candles. We wait a couple of candles, everything gets in harmony here. Now we can go up to the trigger. What do we need up here? Up here we need a bright neon painted green arrow and painted candle. All right, just be the opposite going down. All right, so there it is. That tells us momentum is entering to the upside. But the RF1010 is a trade setup out of the desert. What is the desert? The desert is the highest moving average and the lowest moving average. If we're inside the desert, we do not have this trade setup. So we wait for the candle to pop out of the desert. It does so on that long candle there. That's called the trigger candle. And we will take the very next candle on one condition, that we have total harmony down in the gatekeeper still. Alright, a little bit more about the trigger candle. Before we enter, we let it center. What does that mean? Alright, before we enter any trades, we let it center on itself. So the trigger candle goes off and takes off and goes up 20 pips. What do? Nothing. We wait for it to come back on itself halfway, or center on itself, which in this case would be 10 pips. We will then take the trade from there on one condition, that we have room to the targets. Now it's very important. We never make an entry unless we know the exit. Alright? Now that's also important because we could get additional triggers. If we get an additional trigger, can we take this trade? The answer is yes. We got plenty of room to the next target. Then we get another one up here. Can we take this one? And the answer to that is no, we can't. We're too close to the target. So, you're a newbie though. You say, yeah, but man, you could get 5 or 8 pips up there. Why don't you go grab them? You'd be right. You could get 5 or 8 pips up there. And that's exactly what the average retail trader does. They trade for 5 to 8 pips, and so they then must be right 90% of the time for the rest of their life. It's not possible for you to be 90% correct for the rest of your life unless you are the greatest trader on the planet. Now, if you are the greatest trader on the planet, don't stop doing what you're doing, and you don't need to be in this room. But if you're not the greatest trader on the planet, you have got to stop trading for 5 to 8 pips and learn to trade to targets. So you decided to take that trade and get 5 to 8 pips, and guess what? The big boys can't make that trade, so they go away from the target so they can go at it again. You get stopped out, and what do you say? Ah, the daggone broker stopped me out again. No, the broker did not stop you out again. You took a trade you never should have taken because you took it right into a target that you didn't know was there. Alright, so now I'm going to show you an illustration of a sell, okay? Remember, the 60-minute is not part of this trade setup, so I'm looking for a sell. So now I need a blackjack the other way. There it is, to the downside. I need the moving average down. There it is, to the downside. I need candles below the moving average. There they are, down there. All right, and I also need the momentum indicator telling I have enough gas in the tank to drive this to the target. Check, I got everything I need down here. I go up here looking for an arrow and a painted candle, and not only do I have an arrow and a painted candle, I also have a white dot. The white dot says we are potentially going 55 pips. All right, so I have a potential trade set up here. The question is, do I have a trade? And the answer is no, I don't. And the reason I don't is because I'm right above the 93.00 number. We never trade into a 00 number or a 0.50 number because option contracts are sitting on those numbers. If there's an option contract on it and it executes it, then the trade will go the opposite way. So we need to be able to move our stop to break even if we're going to trade into an even number or a 0.50. That's number one. Number two, we're still inside the desert here. So you see, folks, a trade setup is not a trade. And retail traders get this wrong all the time. Right? So, if you're new to our room, I'm going to quickly go through the 19 currencies, and then we're going to come back on those that show promise. Please hold your questions until then, and we will answer them. But today we also have a fundie. All right? So how do we trade a fundie? All right? We need to always be flat before a fundie. All right? That means that any currency that's going to be affected by this fundamental announcement, that's why it's called a fundie, you have to get flat on it because your stops are not guaranteed during a fundie. So what do? We turn it to a 1-minute chart. And on the 1-minute chart, we will have a reaction to the news. The news comes out, the market reacts to it. Okay? What do we want it to do? We want it to go sideways for 3 to 5 candles. Right? Why do we want to do that? Because we don't want to get caught in a whipsaw, number one. Number two, they're telling us if they don't do that and they go sideways, there are no sellers based on this announcement. Therefore, there can only be buyers in the market. So we go above that sideways move, find any resistance above it, and get above that. We place an entry order, never a market order, on one condition, that we have room to the target. All right? So our job prior to a fundie is to find room for the announcement and then room for the follow-through. And we have to have at least a 1-to-1 risk-to-reward ratio. So let's go in the charts now and let's see what happens. All right, folks. So our job this morning is to go in and find a currency that's a dollar-based currency. Make sure you're flat. Okay, everybody understand that. You got to be flat. So if you're in a trades right now, advanced traders know how to manage a fundie because we teach it. But other than that, you need to be flat. Okay. So oh, it's already there. Okay. There you go. Thank you. All right. So it's coming up, and we got to get through this really quick. You can see the euro has done nothing. Now, I want you to understand, you hear me say this every day, and I tell you the euro is a piece of junk. All right, we have been here 3 days watching for the euro to make a move. And the euro dollar has done absolutely nothing in 3 days. All right, so I rest my case about the euro dollar being a piece of junk. Find better currencies. All right, it only has an ATR of 77 pips. It can hardly move 20 pips in a session, folks. There are 3 sessions a day. 3 sessions a day for 30 pips would be 90 pip ATR. The EU can only move 77. Yeah. But if we did get a dollar positive announcement this morning, the EU might, just might, break through here and come down. If it does, our target would be 34.29. So it's on the list because it does have an opportunity, right? Because it's an EU, it's going to be not a good opportunity, but we'll see what happens, right? But people say, why do you hate the EU? There it is. All right. All right, pound. Let's go take a look at the pound. Again, if we get dollar positive, it's being held up right now by the day chart trend. As you can see, there's the old day chart trend. We've got a 240 trend inside it. It's very, very steep, okay? And that's the problem. This one's too steep, and the day chart is here. So it's being held up by that right there, and we're looking for an opportunity to break through here, down to here and here, okay? We're currently at 62.87. We're going to have to be below 62.70 to get this trade. It has an ATR of 108 pips. Oh, surprise, surprise. It can actually move a little further than the EU, all right? So if we can break 62.70, and that's why this is a big, thick line, because they're having real trouble with that, breaking that. There's the opportunity to trade number 1 and trade number 2, right? So if we get dollar positive,
The GU and the EU are on the board. The GU is already a better trade than the EU, which it is normally. All right, so we'll go with the GU at this point. We're just starting to find where the opportunities are. Let's go look at the dollar Swissy. Okay, dollar Swissy is stuck inside a wedge. We were anticipating a breakout yesterday. It still hasn't made that breakout. And you see we're inside a wedge here. All right, now when we get stuck inside a wedge, there's only one thing to do, and that is to wait. All right. So
there's something happening here. What it is ain't exactly clear.
Something happening here. What it is ain't exactly clear. All right. So what it is when you're in a wedge, you don't know if you're a buyer or a seller. So you have to wait for the currency to tell you what you are, which means you have to break out of the wedge. All right. So the question is, how close are we to break out of the wedge? Okay. What we would like to do is break out to the downside, which would be a dollar negative. If we get dollar negative, the dollar Swissy would have the opportunity of driving down here, down to this part right here, and maybe further than that. Now it only has an ATR of 73 pips. That's only 30 pips to there, so that's not a very good opportunity, but it is on the board because that's all it has to do. We won't take the buy because it has to travel too far before we can trade it. All right, over to the dollar yen. All right, dollar yen is sitting here in this downtrend. It's bounced off the bottom of the day chart trend twice now, and this is the third time it's come down and missed it. Okay, this was an opportunity from yesterday. We'll come back and look at it from yesterday after the announcement. Okay. If you recall, we were talking about yesterday coming up to this top and trading it off the top here back to the downside. We'll see how many people did that. All right. But our problem right now is we're up here. Okay. If we get a dollar negative, it'll turn to the downside. All right. It's already taken the 18 out. So it's right now it's at 30. So it's got to go 12 pips, and then we would get a trade for about 40, well, about 50 pips down here, folks. So the dollar yen is a better trade than the Swissy if we get a dollar positive, all right? So the UJ goes on the table. It's a better trade opportunity. The UJ also has an ATR of 102 pips, all right? So it moves 35, 40 pips further than the EU does, and it's the dollar yen, all right? So the dollar yen is better than the Swissy for the dollar positive. Let's go over the Aussie dollar and see what that looks like today, all right? Here we go. Aussie dollar had a fundamental announcement. It was the RBA that turned it. This is why you get flat, because if you're wrong on this thing and it does that, you're not getting out in here, folks. You're getting out when the market slows down. Yeah, but I had a stop right here. The broker's going to take you out right here. That's where he's going to take you out, and you just lost all that. And why? Because you were in a fundy and you didn't get flat. So there it is. If the fundy goes against you, that's what could happen. That's why you always major in risk. All right. So now we're doing a sideways move, basically with a little lilt to the upside. And in fact, yesterday we did get our breakup right after here. So many of you may have taken that. That was about 25 pips up to there. All right. Once you go 17 to 21 pips, you go to break even. So that should have been a break even trade for everybody. We'll see what happens later. All right. But the worst it can be is a break even unless you broke the rules. All right. Then we pull back down, we're pulling back up, and we're back down here. All right, so what's the next opportunity? Action here. So we're looking for this opportunity right here. All right, so if we get a dollar negative, which would mean the Aussie would go to the upside, we're looking for a target at 89.64. We're at 89.11, so there's 53 pips in there. 53 pips for a dollar negative. That's better than the UJ. All right. So what will happen is we'll come back to the UJ after the announcement, and we'll look for the Aussie dollar as the possibility here. All right. And let's go take the last one. Is the New Zealand. All right. So New Zealand has moved to the top, and remember, it's still inside the downtrend. Okay, as you can see, but it's corrected because it's heavily correlated with the Aussie dollar. They live in the same part of the world. And so they're heavily correlated. So the currency is up in the air right now. All right? We would love to see the sell, but that's probably not going to happen because of it's following the currencies, following the Aussie dollar, which is a buy. All right? So the most likely scenario is it's going to come up and break out here. Well, in order to do that, it's got to move 40 pips before you can even look at it, and so we don't have this on the board today. unless it sells. Now, if it does sell, you can see there's a big opportunity there. Okay, so if it was dollar positive, we'll come back and look at the New Zealand. Won't trade it because that doesn't make sense right now, but we will come back afterwards and see if we can get that. Okay, well, what it means by dollar positive, if the announcement comes out and it is favorable, if the forecast is 53.6 and it meets that forecast or is better than that, that's dollar positive, because this is a non-manufacturing PMI announcement, okay, which means the non-manufacturing world is doing better than they thought it was, okay? That is dollar positive. It means the currency is better. The currency represents the health of the country. It's like the barometer for the country, okay? That's why non-farm payroll on Friday is the mother of all announcements, all right? Everybody who doesn't work on a farm is counted in the United States. If more people are working this month than last month, that means that we are putting jobs on the table. That means the economy is improving. That means the dollar is in better shape, see? Now, if that comes out the opposite way, that means exactly the opposite. It is dollar negative, and that will have a reaction also. So it's all about waiting for this. The technicals say that the price of the forecast has already been priced into the currency. So it is technically priced in already for the forecast. All right. Now, when an announcement comes out and is deviated drastically from what the forecast is, that's when we see a reaction. And if we're prepared, that's where we can find our opportunity. All right. And why do things like the GJ react and there's no dollar in it? It's because what is the base currency? Okay, so like the GJ, the base currency is the British pound. If the British pound reacts against the dollar, okay, then the British pound over on the GJ has a very high probability, which is the pound yen, by the way, has a high probability of reacting also because it's the base currency. Right? So if we get a dollar positive, we will trade the pound dollar. If we get a dollar negative, we're going to trade the Aussie dollar, all right? And then we'll come back afterwards for the UJ and then New Zealand. Now, folks, if you're brand new in here, this is what you have to do every time there's a fundamental announcement. How many are there? 56 a month, all right? All right, that's an average of over 2 a day. And if you are not doing what we just went through and you're getting pounded, you're wondering why. Well, because you're not paying attention to the announcements. It is a trader's job to know when the announcement is, to be flat during that period of time, and to know exactly what currency they're going to trade when the opportunity presents itself. Now, what happens to retail traders? Well, half of them don't even know what a fundy is, number one. Fundy stands for fundamental announcement. The other half are too lazy to go look for it, right? Well, when is it? And then there are other people who just don't care because they're trading indicators and they don't know, they're not watching for, they're not trying to become a trader. If you're doing all those things, you're trying to become a better gambler. That's not how you make it in the Forex. You make it by becoming a trader. Now, I'm a little hard on you because of that, but I need to be hard at times because I'm a mentor. I'm a person who helps people get to the next level. Sometimes that means I got to be a boot camp guy. Sometimes I can be nice with little icing on the cake and it's cupcake time, all right? All right, so enough of me preaching. My goal is to make my traders better. And you will see our traders make lots and lots of pips. All right. Why? Because we have an approach to the market that makes logical sense. It takes the market conditions and uses them to our advantage as opposed to teaching or to being a disadvantage. All right. All right, let's finish off these majors while we're waiting, and then we'll be ready to do the exotics after the announcement. Okay, so here we are in the GJ. GJ has pulled up, turned to the downside, and moved to the downside here during the night. As you can see, this was a really nice trade. This is a session recap. We'll come back afterwards and see how people did on that GJ. All right, but right now, if we get a sell, we can see we could still make a move to the downside here pretty easily, right here, down to here. All right, and that's right now from where we are. It's 1, 2, 3, 4 T30s. Those are 30 pip targets. So that means there's 120 pips in here that's still available. The GJ has an ATR of 224 pips. That means its average true range is 224 pips, which is only half of what that is. All right. I mean, this is only half of what that is. So it could easily make that move, folks. That's all there is to it. All right. So we'll look for that trade to the downside. It was a session recap from yesterday. You'll see there's our little arrow telling you here. And also, if we get up as high as here, we said yesterday, if we get up as high as 166, we want to sell it down to here. If we break through here, we want to double our position. we'll see how many traders did that after the announcement. Right? EJ, all right. EJ, same thing. We're looking for a move to the downside. All right. So after the announcement, remember, we've got to stay flat on all this. Even though it doesn't have a dollar-based currency, they'll be effective because they got a euro dollar, and this is a euro as the base currency. So the euro will possibly react. All right. Side of the euro yen. All right. All right, if it reacts in the way we want it to react, it's the trade down to here. All right, so it's 136.89. This is the trade we determined yesterday that we would be interested in. We would be interested if it got up as high as the 50% right here. It never got that high, went and turned down here. So this is our opportunity. Yesterday, this was trade 1, and this is trade 2. Well, you can see they didn't quite complete in trade 1 to the top, so we didn't get an opportunity really on the first one. But we will be into the second one if it breaks to the downside. You can all see the target is 135.75, got an ATR of 135 pips. It can easily run down here. All right, and the only one we didn't look at was the Canadian dollar, and as you can see, the Canadian dollar is still stuck at the top of the trend, and there's nothing to do till we get a retracement. So walk away from it. All right. Oh, we got 3 minutes left, so we can do silver and maybe dollar index and see what that's doing. Okay, silver did break. Okay, so yesterday we told you our target was either going to be 1893, okay, 2026 if it could break that high, or if it broke to the downside, it was going down to 1890. All right, on the other side of the pond and in Canada got a piece of that. We can't trade XAG anymore in the United States. Okay. We do not trade XAU, which is gold, all right? So because you have to have too big an account to do it. All right. What are they doing with the dollar this morning? Okay, so here's the dollar index, and the dollar index is going flat. They have not moved the market at all, waiting, and the closer we get to non-farm payroll, here's the deal. This week, position traders are not making position trades later in the week. They may have made a couple on Monday or Tuesday, but they're not making them now. Right? Because any position you put in could be totally negated by Friday. Right? So that means we got a big section of the market sitting on their hands waiting for non-farm payroll to get through. Right? So that's going to create a lagging market, a slow market, and a market that is anticipating and waiting for something to happen. Right? Yeah, it is the ultimate weight trade. You're exactly right. Right? So, you know, it is what it is, right? You got to deal with it, right? And it's Friday at 7:30 in the morning, and you definitely are going to be totally flat in that market right there. In the old days, the average first 1 minute candle was 84 pips. 84 pips was the first 1 minute candle after non-farm payroll. The total movement of non-farm payroll typically averaged 1,000 pips. So crazy stuff. All right, let's see what do we got now. All right, we're in good shape here. We're going to wait. I'm not going to do any more. Remember, there's nothing to do for 3 to 5 minutes. All right, so Pip will get the announcement for us and tell us whether it's negative, dollar negative or dollar positive, and that'll tell us which currency to go to, and then we can sit there and watch it. And one of the first things that they will do, right now there are a bunch of traders out there who are gamblers. They are straddlers. What do? They go to the currency and they put what they do is the currency is running like this, and they put a buy here like this, and they put, from down the bottom, put a sell here like this. And they go, whatever way the currency goes, I'm going to be in it. That's the ultimate gamble, all right? I'm going to risk all my money for an up move or all my money for a down move, all right? Now, I'm going to go one way. But that's not what the market makers do. What the market makers do is pop it up here and get the buyers in and then take them down and then do the very opposite here, and usually they'll get all of it. All right, it's dollar positive. Dollar positive means that we go and trade the British pound. So over to the British pound. Thank you, Pitt, for getting that as always. All right. So it's not a big deviation. It was forecast for 53.6. It's actually 54. Right. So it's not a whole lot of difference here. Down to the 1 minute chart. Now, why are we down on the 1 minute chart? Because things are going to happen 10 times faster than they normally do. Right? So they've already got the sellers in, as you can see. All they had to do was move it 1 pip, and they got them in every time. Right? So they got the sellers in. Now the job is to go up and take the buyers in and stop the sellers out. Right? So, and you say, well, why do they do that? I mean, well, because the market makers know that there is on average $800 billion of retail money in the Forex every single day. $800 billion. Their job is to go get it. All right. The vast majority of this is the dumb money. All right. That's the vast majority of the market. All right. Is dumb money. Why? Because 90% of dumb money fails. Right. So most of that is dumb money. Right. So all they got to do is be smarter. And so they do the smart things, and they're going to take them out. So we'll see. We'll watch them. They're already taking the sellers in. You saw that little spike to the downside. I'm on a 1-minute chart. All they got to do now is move it up about 4 or 5 pips, and they'll pop the buyers in because of the increased spread, number one, and also because of the fractional pricing. Now, if you're an old trader like me, I still have rounded pricing. I don't have that. So we'll go. And they may not do a thing with this funding. They may not do a thing. They may go, ho-hum, who cares, right? So it's about the collective response. Everybody at every bank is making their own decision. When they collectively decide, yeah, let's go, then that's when we'll see a movement, right? So we're holding here, right? There's nothing for us to do right now. Right? So we can already see that our trade is going to have to be below this 73 here, and this is a big hard line here. So we'll want to be below 65 in reality here. All right, we're at 76 here, so it's going to have to move about 15 pips. So we're going to put a trade in for 60, 62. Let me look at this one over here. Hold on. 55 and 52. So 60 would probably hold. We'll put one in at 60, 62.60. All right, so it's an entry order of 62.60 in, and our target is, first target is 62.20, that's 40 pips away. Second target is 61.79, and that is another 40 pips. So we're looking at a 60 pip trade here, folks. Part 1 is here, part 2 is down here, all right? So as you can see, they didn't do much with the buy here at all, all right? So let's see if they bounce back up here. So why we want to be below here, because they might bounce, all right? Yeah, watch the 62.50. We're going to double our position below 62.50, folks. All right, you can see that. Why? Because this is what. Here's where we trade, folks. Why? Those are big, wide open spaces. You only want to trade in an area that's a wide open space. All right, but the chart tells you exactly how to trade it. 62.50 has got an option contract on it, most likely. All right. People say, well, do you have to know what the option contract is? It's good to know it. That's why we posted in the notes. Pitt posted in the notes for you. But it's good to know that, yes. But the main thing is that you just consider that every 50 and every 00 number has an option contract on it. All right. Because even though, like for instance, the London market, there's no option contracts there that are expiring. All right. But what's the deal over there? It's because their option contracts are so strong in the New York session, they create psychological barriers for other traders. And so all of the 50s and the 00 numbers are respected in every single market. Right? Now you see why we went below the 62. Can everybody see why we didn't go to the 65? We didn't make a trade automatically, right? Because that's the bounce point. All you have to do, this is the rocket science in the Forex. Here's it. You want to know the Holy Grail in the Forex? Go look to the left and see what they did, because that's what they're going to do here. And that's it. There you go. You got it's not the secret to the Forex right there. All right. Go do the work. Go in the past and see what it did, and you'll know what it is. We can't trade this above this line. We can trade it all day below that line. See that? And if we'd been too close to this, we could have got wicked in. See? All right, so we're going to trade. Our first trade's going into 62.60. All right, 10 pips later at 62.50. When we break hook and go below here, we're going to double our position here. As we approach the 62.20, we're going to move our stops on both of these down to break even or plus profit, because there's a bounce point here. If it doesn't bounce very high and break hooks and goes here, we double our position again here for the 61.80 area. All right. That's it. That's how it's done. All right, now they've got the buyers in now. All right, see that? They went up here. Here's where we started. They just wicked the buyers in. Now the buyers are in. Now remember, this is a dollar positive announcement, which means dollar part of this should go to the upside, and the seller should go to the downside. So they now have got the sellers in, and they just stopped them out because typically on a straddle, the stop is 15 pips. All right. So here's where they started, right here. All right. So they went down here like this, and now they've got them stopped out on the down out, and then we'll wait for the turn down to here, and there's our trade. Gee, really, this is what's happening. Yep, that's what's happening. We're able to watch them do it on a 1-minute chart. Well, you need to understand, folks, it's important that you understand the why of the market. All right? What happens to traders and they go in and say, I want to learn how to do the market. That's the wrong way to approach the market. I want to learn why. All right? Find out the structure. Find out what the big boys do, because they're the ones who create the structure, and then follow them. They're not following an indicator. Right? They're not indicator junkies. They are not clicking out for 5 to 8 pips. Right? They are planning trades and making business decisions that make sense. Right? That's what we got to do. There's Pips. That's Pip's best 2 questions you could ever get. We use hers every day in our room. Right? There are really just 2 questions we have to answer throughout each day. Number 1, what are they doing today, and why are they doing that? And once we got that figured out and we're ready to trade it, what's my risk? So if you want to know the 2 questions, there they are. All right? That's it. What's my risk? We major in risk. That's why we sat on the sidelines on the 1-minute chart here, because the risk is too great to jump in. What's the risk if you're a straddler? They take you in on both sides, which is you just watch them do. All right? That's too high a risk. We wouldn't do that. That's gambling. All right? So what do we know what they're doing? They're waiting for the announcement. They're taking the straddlers out, so they've got to put $400 billion in their accounts here. So they've already had a good payday. Right now they've had a good payday, especially when they come back down. And when they break to the 62, now they're going to do the trade that they've been trying to do all along. All right? It's not. It was just sitting there. Yeah, they were thinking. All right. It's moving. All right, we're just waiting. It's a waiting game, folks. We already have it down in here. All right. So we'll kind of, while we're done here, somebody just keep an eye on this one. I'm going to keep going so we're ready for the rest of the currencies. So we're over here now on the exotics. Okay, we already got a trade in. There's nothing to do about it. You put it in at 62.60 and you walk away. It either works or it doesn't. You know, we plan the trade. Now we trade the plan, and that's it. All right, as you can see, the Aussie yen has broken to the upside, and the 240 trend is still in the downside. So we still have some bearish happenings, but we know that the Aussie part of this is moving because of the fundamental on Monday. All right, which means this is an A, B. We're looking for the C out here. All right. So even though we're here in a downtrend, and that is an opportunity to the downside, it's highly doubtful it will happen because the structure of the market says we're going to do a C to the upside. All right. Why? Because we reversed this whole market because the Royal Bank of Australia made an announcement that changed the fundamental structure of the country's economy. All right. That's why. Before that, they were bailing on the Aussie dollar. All of a sudden, they go, oh, well, maybe it's not so bad after all. See? You as a trader are responsible to know that and why that's happening. You got to know the why of the market, not how do I make a trade, man. All right. So there it is. All right. So we're going to watch it. If it does go and it breaks this bottom, I'm all over that. Don't get me wrong. I will trade that to the downside because of the huge opportunity, because the opportunity is all the way down. All these targets have been taken out over here. You see that? So our opportunity happens, but I will take the sell if it happens. Now let me put this up a little higher. Then we're going to take it above here, and then we'll be interested. Euro pound is attempting a breakout right at this point. All right, we're attempting a breakout to the upside. We'll see if we get it. All right, so it's stuck in a wedge. If it doesn't, if it doesn't make the breakout, we're nothing. This breakout right here. If it does, we're looking for a trade for about 55, 60 pips up to here. Now, it pays $1.63 all right, $1.63, all right, which is 63% more money than the euro dollar pays, all right. It moves almost as far as the euro dollar, right, and that's it. So, is it still freezing? Oh, mine's moving, so just not moving very much. Oh, yeah, okay. So we're looking for that opportunity right there, right? So about 50 pips paying 63% more, okay? That means that it can go 63% euro dollar. Oh, well, the euro dollar only moves like 70 pips a day, right? So 63% would be a 30 pip move. Wow, okay. All right, Euro Aussie is sitting here waiting for the sell to continue to the downside. We're going to see if that happens here, and you know, we're waiting to see this break. We're back up to the top here, as you can see. Then we go down to a 60, and you see we're doing a sideways move. We made good money on this week already. We made really nice pips on this thing. I think we made 156 pips or something like that on there. All right, so we're doing a sideways move, which is called the pole. Whatever you did getting into the pole is what you're going to do coming out of the pole. All right, so we're looking for an opportunity down about here. We can actually measure that, by the way. In fact, I will do that because this is a trading room, not a trading room. We will take every trade we can trade. All right, but our purpose here is to learn how to do it, the how of the market, not learn how, not push the button. All right, so we started this move on this long candle right here coming down, and that's the top of the move right there. It's just a visual, okay? So let me get my calculator here, and the move started right here on this current candle right here, 54.34, 54.34. At the top of this candle is 52.31, 52.31, and that equals 203 pips. All right. So we went into this movement with 203 pips, which means coming out of the movement, we're going to go 203 pips, all right? Now, that's a statistically high probability, folks. It's well over 70%, all right? Forgot. I clicked the wrong button. I don't know why I'm doing that lately. All right, sell 203, and okay, there we go. All right, so you can see where our target is based on the pole is here, right there. That's what we're looking for right now. These targets have all been taken out in the past over here, so they're not really relevant at this point. There will be barriers, but they're not targets anymore. So if we get this trade on the break here, first trade will be to here, W position here. Second trade will be here, W position there. Third trade will be here, W position there. Pretty simple to see. See, the chart tells you exactly how to trade it. What's the deal? You got to get all these lines on the chart. Yeah, but that's a lot of work, man. I don't like to do that much work. I just want to push the button. Don't push the button. All right. Okay, so you see what's happened. This is why we use a entry order, because the currency has got to prove that it's going to use that as a catalyst. All right. What have they proven right now? They stopped the sellers out, as you can see. Everybody who jumped in because it was a dollar positive jumped in on that trade, and what ended up happening? They all got creamed. Everybody see that? They all got creamed. Did we get creamed? No, we didn't get creamed. Why? Because we have a plan. We have a way to trade fundies that keeps us as safe as it is possible. All right? So they're about reacting off that day chart trend line still. All right? So I am not anticipating now that they didn't take it to the downside. They have now, remember, they have an agenda. The announcement said they should go down. There is nowhere to go to the downside. So their agenda is let's go fix the structure of the market. All right. So where are we at? We're in a 1, 2, 3. We need a 4 up to the top, and then 5 waves to the downside. So my opinion, that and $1 won't buy you a Starbucks. My opinion is what they're trying to do is get set up now for non-farm payroll on Friday, which means they need to be up here. Why do they need to be up here? Because professional sellers won't sell at the bottom. Professional sellers will sell at the top. Okay, everybody see that? Structure, structure, structure. Wait for your trade. All right, we're going to take that off. We have new information that says they don't care about this announcement one bit. All right, they're going to build the structure. All right? And that's good for us. The higher they go, the better off it's going to be for us. All right? So take that pound trade off now. Everybody ought to be glad they didn't jump into that. All right? See? All righty. Let me drag this up a little higher. Okay. All right, let me finish this and we'll get through here and we'll figure out what we're going to trade here. Euro Aussie's coming up. We're looking for the sell to the downside. Nothing to do till we do that. All right, CAD Yen, we talked about this yesterday. It's probably going to go sideways. Nothing going to happen. Sure enough, it went sideways. Nothing going to happen. All right, so there we are. Let me clean this up a little bit. All right, we're in the fifth wave on this CAD Yen. So, you know, it's nearing the end here. All right, we'll see what happens. All right. It's no longer doing this. The channel, we'll leave this one on here. It's basically, actually, you could change that channel a little bit. Hold on. And when you see it, remember, this is a visual business, folks. When you see it, you draw it. All right? That helps you get in tune with what they're trying to do. All right? I can see now they're working this channel right here. See how I had to adjust that? I had an old channel on there. They weren't. I can make a decision. If they break here, they've already taken this target out. Therefore, the next target is this line right here. All right, those of you who are with me on Pip, open this up for a minute. Enable for a minute. I'm going to ask one question, and that's it. I'm going to ask one question, so Pip's going to enable the chat. All right, I'm waiting for her to do that. There we go. Okay. Those of you with us on Monday night, what is my percentage chance of getting to the heart line? I'm only asking one question, Tom. Sorry, did you hear me? Here's what happened to traders. They don't pay attention. I just said I'm going to answer one question, and what happened? People ask questions. All right. All right. Good. Look at how you paid attention. Nice work, folks. You see that? Way to go. Nice work. Nice work. Nice work. All right. Now, at a wedge, we wait till it proves what it's going to be, all right, because we don't know what this is. All right.
There's something happening here. What it is ain't exactly clear.
Something happening here. What it is ain't exactly clear. All right. In a wedge, we sit on our hands. Break the wedge in the direction of the trend with an 80% shot to the heart line. That is what we call a no-brainer trade. That is a no-brainer trade. Wait for the trade to come to you. If it comes, you pop on it. It's a sitting duck waiting to happen. All right. Now, will it work? I don't know. Remember, it's only 80% to the heart line. That ain't 100. See? But you stack the deck on your side and take trades that I don't know the probability. That's what you got to learn. Don't be clicking the button with a bunch of money when you haven't got a clue what you're doing or what the market's doing. You're gambling. Become a trader. A trader learns how to do it. They learn the how, not the why. I can teach a monkey to push the stupid button on MT4. All right, so that's not the problem. The problem is understanding why I push the button on MT4. And most people, the reason they push the button on MT4 is they just want to push the stinking button. All right. I like that trade if we'll get that CJ. Right? And it took them all day to build that opportunity right there. From yesterday to today, but it's here now. We'll see if we get it. We're going to keep coming back to it. I might want to reload. Okay. Hold on, let me reload. It's a little strange. We get this many traders in here and it bogs the bandwidth down. So let me reload the conference in my browser. All right, can we see it now? Yeah, I did it. Yeah, not drawing. Yeah, I'm on the pound chief, but I'm drawing on the pound chief. You're not seeing it draw. It drives me crazy. I don't understand this. I'll tell you what. Can you see my cursor moving? All right, so hopefully tech support will solve this problem. I don't understand it. It's not on my side. I'm using a RAID server with 10 megabytes of RAM. I've got nothing else running but this, and I've got a high-tech video card. It's a gaming server, RAID server. So simply too popular for your own good. Yeah, exactly. Well, I don't know about that. You know, success is what helps. You know, the key here is not me, folks. Don't ever get it. Oh, well, Scott's the do. That's not the deal. The key here is my traders. Our traders are taught how to do this, and when traders know how to do it, they can make pips. It's just that simple, right? And there's no guru stuff here. There's none of that kind of thing. There's no holy grail stuff here. We learn how to read charts, and we learn where the opportunity is, and we wait for the opportunity, and when it's here, we pounce on it. That's just it. And when you learn how to do it and you get the discipline to execute in that fashion, you're going to see. You're going to see again today. We're going to open up here in just shortly and ask about the session recaps, and you're going to hear about people making hundreds and hundreds and hundreds of pips from yesterday. And you were here yesterday. So let's see here. Is tech support here trying to help us? All right. I'm drawing again on the chart. Nothing. That's a good idea. Yeah, let's do it. Okay, so let's start over here on the pound dollar. Okay, so we had a alert yesterday. Oh, it's not coming up. I need it. Pep, I'm just gonna have to wait here. Okay, Morgan, send you a private message. Okay, thank you, Morgan. Start dropping the projection and restarting. Okay, I'm going to log back. I'm going to log totally out, folks. All right, I just did that and it didn't work, Morgan. So I'm going to try to, I'm going to exit the conference room and come totally back. All right, we're on board here. And I'm drawing again. There we go. Looks like we're good. All right, good. So let me finish this, then we'll do that. All right, so pound chief. We're waiting for this break to the downside. It's had a breakout, had a break and a hook. We talked about this hook and a go. We're going to trade it to here and double our position here. All right, so we come back. We'll figure out how many people did that because that was totally talked about yesterday. The opportunity, how we do it, not why and what. I mean, why we're going to do what we're going to do, I should say. All right, we already did the British pound. We got this big opportunity to the downside here, pound Aussie. And pound Aussie was a great opportunity from yesterday also, and we'll talk about that in a minute here. But at any rate, we're working a little channel to the downside here, so let's draw the channel. Draw it when you see it. All right. And you go, I didn't see that. Then you got channel work to do. How many did you got to do? 300. What do you got to do after that? You take a day off. All right. So 300 channels. All right. Working a channel. We get to the top of the channel. If it respects the channel and sells, we trade it to the downside. All right. We're in a downtrend. Top of the channel is the place where they got to talk to us. All right. Right now they can move it all the way up to here, and we understand what they're doing. But right here they got to talk to us. They either break it out, in which case we're not interested, or they sell it. If they sell it to the downside, we're interested. All right. We got to wait till they get there. I don't like to wait, man. You're on New Zealand. Okay. They were working the channel yesterday. Broke out of the channel, doing a sideways move right now. This could be the head fake before the fall. So let's kind of hold off on this one. A lot of times there's a head fake before they do the jump, the fall to the downside. But you can see here, we're working our way down here. Euro New Zealand, it's going to have to wait on this one right here. You got to be a seller. You can't be a buyer here, folks. The reality of the situation is, as you look at it, is it was doing a trend to the upside, but it's no longer doing a trend at all. Get this off of here. Come on. There we go. All right. It's no longer doing a trend. We had this breakout here. All right. Now, what is it doing? It's trading in a box. This is a big box. See? Everybody see that? That means there is no trend. All right. Then that makes sense that it's going to trade up to the upside. But once they start trading the box, they go up to the top, down to the bottom, up to the top, down to the bottom, up to the top, down to the bottom, until they finally figure out direction, and then either break this way or this way. So we're in the process of going to the upside right now. All right. So we would trade the box to the upside. All right. So now we know what it is. Now that we know what it is, now we can determine whether we'll trade it or not. All right. So that means that this is the bottom right here. All right. So we'll put that on. HSI, and you see that they know exactly where these lines are. Once they do that, and they know right where they are, and you see them stopping there, you see them stopping there, right along there. There's the next target up there, and they're going to run into this top before they ever get there. All right. So the question is, if we break above 65.20, would we take the trade? 65.20 or 65.13, 65.20 up to 66.30, 110 pips. Yeah, I'm interested. 110 pips. All right, got 3 minutes to the option bump. All right. That means the option, in 3 minutes, the options are going to expire. When they expire, the market can move because they don't like to move into the option contracts. All right. But once they expire, then they can do it. So it's above 65.30. It's going to be 65.30. We're going to be interested in a trade at 66.30. So 100 pips there. All right. Euro New Zealand. All right. Now, normally you see in a room that's smaller than this, when I don't have this many people in, I'm going pretty fast here. Pound New Zealand, all right, we'd already be through and be looking for trades. Well, we don't have them all done yet here. Okay, so we got another channel that we're working here. So let's draw the channel. All right. I didn't see that channel. You got channel work to do, folks. This is a visual business. If you didn't see the channel, then you have work to do. All right. There's the channel to the downside. All right. So here they go. If they stop here and turn to the downside and go there's our trade right there. All right. If they don't and they bounce up in here, we got to be very careful. Why? Because we probably won't even trade it, because there's the old uptrend. We're not in an uptrend. We're in a downtrend. All right, so let's draw that downtrend up to the 240 and see if we can get it on there. All right, so there you see, there's the breakout. Ooh, here's the problem with this. This is too steep a trend. All right, so we're going to have to adjust this trend. I'm not going to take the top. I'm going to take this sideways here, across these two twins, down the bottom here, and I'm going to attach it. And my job is to see if I can prove the heart line. Yeah, we got it pretty well proven here. Okay, see that? I know where that is. I know where it is right in here. Okay, so all right. So a turn to the downside, and we're interested in that trade right there. All right, that's it. We're not interested in this one, by the way. All right, not yet. We might be interested a little later, and then that would be an adjustment. But we don't have enough information to make that call yet. All right. So we'll see. If we get the sell to the downside, I'll be all over that one. All right. But it's on the kind of on the shelf the way it's moving. And here's the deal: as a trader, you got to be able to go, man, I'm not sure about this. And when you're not sure, you sit on your hands. New Zealand yen. All right, New Zealand yen has come up here. This is an A and a B. We're looking for the C to finish this off to the top. And what does the chart tell us? It's kind of nothing happening. All right. So we're going to put this on the shelf, not mess with it here at all, and wait and see if we get the C to the top. Okay. Finally, the Aussie Chief. Aussie Chief was a trade from yesterday, and we'll find out in just a minute how many people got that. We're looking for another bounce up to the top and then a break above the top here. All right. So let me take this off now. All right. And all right. So we'll wait and see if we can get a bounce back up to 8,100. All right, we're going to open it up, and we're only doing session recap pip captures now. No, I'm not going to answer any other questions, but session recaps. How many took the bounce off the Aussie Swissy yesterday up to 80.92? All right, and what was your pip count? All right, come on now. I know a bunch of you did it. Aussie Chief, bounce off the bottom. You're still seeing the F, G and D. I don't understand this, why this is doing this. All right, nobody took that. Aussie Chief. Nobody took it. Man. All right, there was 65 pips there. All right. I can't help you. I'm on the I don't know what to do. I don't know how to stop this. I don't know where's the technical support guys. I mean, you've got to help us figure this out, folks. Come on, tech support. You're here, so tell us how to do this. The charts are frozen. Had an apple. Had to get rid of it, Amanda. All right. Had to get rid of it. Tried to do it because you have to do it in boot camp, and you might as well be working on Windows. All right, there we go. I need Aussie Chief. Okay, so we can't count the Aussie Chief. Only 2 people took it. We can't count it as part of our record. All right. New Zealand, there's nothing to do. Pound New Zealand, there's nothing to do. Euro New Zealand, and the Euro New Zealand, there's nothing to do. Pound Aussie, now different story on the Pound Aussie. Pound Aussie was a trade to up to the top and then a turn to the downside. All right. So how many took the Pound Aussie to the downside off the top? All right. 93. Okay. Anybody else? How many pips? I don't need I need pips. We're trying to find out the pip counter. Here's what happens to traders. You ask the question and they don't listen. All right. I asked the question and traders go, I did. I said, I need pip capture. And people, this is a problem with traders. All right. So we all have to work on this, folks. Traders don't listen. Traders don't read. It's the nature of the trader. All right. So we got to work on that. All right, 71.47 for Amanda, 50 for John, Liz 60, Joe 80, 20, 25. Nice job, Cherie 83 and 52, Andrew 88, 57, 44. Okay, good job. 52, nice job. Ralph 335 still in. Obviously, you took the whole thing, Ralph, so you're still in from the top. Nice work, Ralph. All right, 32 for Amar, 50 Mosen, 50. Okay, so it looks like we could count 50. Would everybody agree that that would be a good count? 50 on the GA. All right. It's your record, not mine. So use 71. Okay, that's 71. That's it. All right, there you go. All right, so we've already been through. We get a turn here. We're going to trade this to the downside. Okay. All right, Pound Chief. We talked about this yesterday. It had 2 options. One was to bounce back up into the trend, or to make a turn and go back down to the double bottom. All right. So the Pound Chief from the top to the bottom. How many made this? Fabiola, did you just hear what I said? Okay. Oh, never mind. Pound Aussie. All right, good. Thank you. All right. I didn't see your Aussie over there. Thank you. All right. How many took the break, hook, and go? It was on a big chart, but it's still a break, hook, and go to the downside right there. Pip captures only. All right. 51. Nice, Zachary. All right. There you go. 20 minus 24, Randy. Okay, you got to figure out why you did it. When you take a loss and people made money and you took a loss, you got to go, okay, what did I do wrong? Okay, Amanda, 59 and 38. Okay, John, 35 pips. Okay, all right. So far, we're looking at about probably 35 pips so far. Anybody else? Nobody else? Okay, Pound Chief. We're going to look at Pound Chief at 35 pips. Okay, nice job. Okay, 65. Nice job, William. Okay, good work. All right, let's look at the CAD Yen. CAD Yen's nothing yet. Euro Aussie was, yeah, that was a trade. Remember we talked about this yesterday? All right, if we get a bounce back up to the top, you want to trade it to the downside. All right, we look for a big move to the downside. All right, so anybody take the Euro Aussie? All right, anybody? Okay. Looks like no. All right, we'll keep going. 65, Liz. Okay, 29, Jonathan. Anybody else? 30 and 44. Okay, nice job. Well, we now got some. Okay, count. I need count. I did doesn't count. Daniel. See what I'm saying? I just said Traders don't listen. What happened? Traders don't listen. I said, we only need pip capture. I saying I traded it, that does not do any good. And what happens? People still do it. So come on, let's work on it. We got to be able to read and we got to be able to listen. All right. There you go. 38, 74, 65, 15. Daniel minus 54. Charles, what is going on, Charles? I've got to work on your entries, buddy. All right, Charles, we got to work. We got to work on it. You know, I don't know what we got to do. You got to really do some analyzing, Charles. All right, so let's call Amanda's 38. All right, Amanda's 30. When we get them, we will take them. All right, 38 for Amanda on Euro Aussie. All right, good job. We're still working here, trying to get through this, folks. Now, normally we don't have this problem because we don't have crazy questions and people understand how to do this. They're quickly, and when they're used to the room. No, we don't trade. The pound was an opportunity yesterday. Pound was also here. Let me pop this up. All right, so hold on. Pound. Here it is. It was an entry order. Let me see if I can get it up there. There we go. Okay, so we can see that things are working. It was a sell at 62.70. Limit is at 62.20. So up here at 62.70, which is right here, right now. We had to stop that trade because right there. All right, so nothing there. All right, I'm not there yet, Zachary. Wait till we get there. All right, so dollar yen. Dollar yen was a trade after the pullback, traded back down to the double bottom. How many traded the dollar yen after the pullback, back down to the double bottom? That's the trade right there. All right. All right. Anybody? UJ? $54 for Rick. Anybody else? We have 3 or more traders. Edgar's got 70. Okay, one more guy comes in, and we will be able to count the average. All right. If only 2 trade it, we don't count it. Even though we identified it, we had a couple traders. Come on, in a group this big, we got to have 50, 60 traders trading every single thing we got. All right. So. All right, well, your problem is you got FXCM, right, Henry? There we go. Amanda, yay, girl, 62 and 38. Okay, so let's count Rick's 54. All right, that's right in the middle, as you can see, 54. All right, we're hurrying here. I want to get through this so that we can answer questions. We can find trades if we have any, okay? All right, this was a trade that should have been break even for everybody. This was a trade that happened right after we closed the room yesterday. Was a break here. It went up about 20, 25 pips. At 17 to 21 pips, you're supposed to move your stop to 0. That should have been a break even trade for everybody, and that's what we're going to call it, all right, is a break even trade. If you didn't execute that, that is your own fault, all right, not anybody else's. So AU is a 0 trade, all right. And now EJ and GJ. Hey, finally, and right here we were looking for the EJ to the downside. Okay, after the pullback, it did do the pullback, and it was a short part of the trade. It hadn't quite finished off yet. All right, so the first part of the trade was that we actually were looking. Remember at the 3. We said it may turn it to 382, maybe the 50 and the 618. We don't know which one. So there's a possibility some of you got this one. All right, same. It was available yesterday. All right. You have to come back to this room. It's posted 145, 65, and 25. Nice job, John Robert. 29 and break even. Okay. And anybody else? All right. 47 for Alex, plus 1 for Ralph. 70 for Joe. Nice work. Okay. 49 for Bob. Nice. 50 pips for Zachary. Nice work. Let's take Zachary's 50 pips. What do you think? That sounds pretty good to me. All right. EJ is 50 pips. All right. The point here, folks, is not what I get. The point is what do traders get? Because you're a trader. What you want to know is not what Scott could get. What you want to know is what could I get if I learned how to be a trader? See, that's the difference. All right. All right, Andrew, 96, 79, 61, 47, 31. And you can see that Andrew has become a master of pressing his winners. Nice job. So, all right, there we go. All right, GJ, last one. All right, GJ was a really nice little trade. How many took the GJ after the pullback to the downside? It was a big trade, so Off the Twins, nice job, Herman, 150 pips, way to go, Herman. Anybody else? All right. Really nice trade here, folks. We identified it yesterday. All right. 65 and 28, nice job. All right. Anybody else? 45, 56, Rick, nice job. Bob, 50, nice job. Amanda, 98, 72, 46, and 28. Way to go, Amanda. Pressing her winners. Carlos, 38, 47. Pressing his winners. Good. Cherie, 60. Nice job. 73, Cherie, 73 and 46. Okay. All right. Nice job. So it's 85 for Pablo. Way to go, Pablo. All right. So Clint, nice job. 140, 115, 88, 55, and 23. Way to go, Clint. Nice way to press your winners. Andrew, 141, 127, 110, 93, 69, 42. Everybody notice. Pressing your winners makes you money. That's what we teach, all right? Rudy, 25 pips, and Andrew's got 400. See the difference? Everybody says, how do you guys make 40,000 pips? Because we press our winners, all right? See that? So nice work, Jeffrey, 35, 24, 15, and 12. Okay, all right. So that's right, Sarah. We're talking about yesterday's. Yes, Sarah. Okay, so we got to figure out what's the average of all that. Let's take Cherie's 60. How about that? Does that work for everybody? Cherie's 60 for the GJ. That's probably right there. All right. All right, we're done with pip capture. All right, we've already identified here. We've identified a few currencies that we want to trade. One will be the Aussie dollar. Okay, remember, we wait for our trade to come to us. All right, so there's no hurry here. The New York market always moves late. Our opportunity is always the wide open space where there's nothing to stop it, and there it is right there, as you can see. All right, so I've lost my sound effects, so sorry I can't play it, folks. All right, but that's our opportunity right there. We're not there yet, all right? So that's the opportunity on the Aussie. Not here, but it's close. We'll keep an eye on it right there, all right? The other one is the New Zealand, all right? And the UJ for the majors. New Zealand, we will take the sell if it gives us a sell. Right now, it hasn't happened yet, but it's close. So we'll pull this thing down to a 10-minute chart, and we'll watch for it. If we get the sell on the and you can see they know where the desert is. The market knows where the desert is. And once they enter the desert, that's a key. They're going to try to make it across. The problem is they don't have support for that move once they're in the desert. They don't have support for that move. All right, so somebody has to make it, and it's a very dangerous trade in there. All right, so we'll kind of put that one on the shelf. We'll come back to it. UJ is the other one over here for the majors. All right, UJ, we're looking for continuation to the downside. We have pushed down once, and we popped back up. So we're looking to see if we'll push down again. All right, so here we are. And we'll see here, and they were working a channel and popped out of here. Hold on just a second. All right. We're going to have to sit it on the shelf here for a while, okay? Because you can see, you know, we're not indicator junkies, but we're not against indicators because indicators feed us information we can't get any other way. That says we're still trying to push up. That oscillator says we're still trying to push up. This setup says we're still trying to push up, all right? This candle and the HMI over here said we're still trying to push up, and we're in a downside. So what do we got to do? We're going to walk away until it absolutely breaks this line to the downside, break, hook, and go, and then we'll trade it to here. Trade 1, and trade 2 is down to here. Trade 3 is below there. All right? See how it helps us? We're not indicator junkies. We don't follow indicators. All right? So there we go. All right. Now, while we look at multiple charts, all right? We look at 240, 60, 30, 110, 10 minute, and we trade the 240 chart, and we enter on the 60, on the 10. All right, that takes care of the majors. Over here, we are filing our teeth for the CJ if it'll break the wedge. All right, it's a sitting duck waiting to happen, and then we got to get out of the wedge. And you can see she's stuck inside the wedge. If she breaks the wedge, all right, we have a little opportunity here. Right here, we're going to have to take a small position here, all right, very small right here, because we need 1/3 of our lots only, all right. Always remember this: you're only trading 1/3 of your lots on the first trade. 2/3 go in once the trade proves itself, which means you always have to have two wide open spaces or a very large wide open space in order to make that trade. All right? One of the problems that retail traders is that they go all in with one trade and they click out for 5 to 8 pips, and then they got to be right 90% of the time. So every time they take a loss, it's 30 plus pips. They are digging a hole so deep they can never ever dig out of it. All right? So don't do it. That's all there is to it. Now, the problem we have and we got to watch for here is this is a potential head and shoulders. All right? So what's got to negate the head and shoulders, and if it takes the breakout here, that's a commitment to make the move. We got an 80% shot at the heart line. All right? So we know we got an 80% shot at the heart line, and that's 30 pips, about 50 pips away. And we might have 60 pips in here. All right? So 1/3 here, double your position below the 90.88, and we're good to go there. All right? So it hadn't happened yet. Yeah, but why don't you just take it, man? Because we don't manufacture trades. We trade when the market says we're going to trade. All right? So what do we need? We need a break, hook, and go here, and then a break, hook, and go here for that target down there. We're looking for an overall target of 89.75. All right? So no clicking this sucker out for 5 to 8 pips, folks, if we get it. All right, Euro New Zealand. All right. All right, Euro New Zealand, we're looking for the sell. It's way, way away from it right now, as you can see. Way, way away from it. So we're going to have to put it on the, oh wait, we're looking for the buy because we're in, sorry, we're no, see, I needed to change that. We're looking for the buy above here because we're trading in the box. Sorry, my fault. All right, we're trading in a box here. I can see something here. Hold on. Everybody see this? Oh, no. Ooh. See, folks, you have to be able to see it. It's a visual business. If you didn't see that, you did not see that, you got trend work to do, folks. All right, it's more than every 6 candles is a day chart, so this is reality is a day chart trend. I'm on a 240 chart, but it's actually a day chart trend because every 6 candles represents a day. All right, so there's a day chart. All right, to the upside. All right, we're looking for this big opportunity. Anybody interested in that? It's only 1, 2, 3, 4, 5. It's only 150 pips. Anybody interested in that wide open space? 150 pips in a wide open space. That's it. All right. So there we go. Looking for that heavy duty right now. All right. Euro New Zealand. Nice. All right. Big opportunity here. All right. We're going to take it down to 60 and see where we're at. You can see that they're having trouble with both of these lines here. We're going to have to be above 65.30, all right? And we're currently at 64.40. So it's got to move 50 pips, all right? Now, if we start seeing it move pretty quickly, we could get that 50 pips could be taken with a very small position. It could be taken with a small position, and we're going to double our position above 65.30. All right. Now, here's what happens to traders. They don't want to plan their trades. Please tell me where to get in. Can we take a trade now? All that is crap, folks. Just get out of your head and learn how to plan a trade, what you're looking for, and learn to wait for that to come to you. Right? There are only 1 or 2 real opportunities per session. 1 or 2. I will guarantee you that 95% of you in here are overtrading. 95% of you are overtrading. See that? So, and here's questions like, Gene, that chart's very busy. Listen, Gene, you got to have charts that's busy because you got to know where not to trade. Every one of these lines is a place you can't trade. All right? So, what does that mean? The places in between those lines is where you can trade. All right? Now, if you don't have charts with that many lines on it, you do not have enough information to push the button. You don't have enough information because you could trade right into one, and I guarantee it's happened. You traded right into one, and it flipped down here, and you got stopped out, and you said, the daggone broker stopped me out. All right? Now, I'm not picking on Gene. What I'm doing is that Gene gave me an opportunity to answer this in a very real question. If you don't know that opportunity exists, you won't make the trade. The only way you know that opportunity exists if you find the barriers so that you find the area where there are no barriers. You see that? That's how it works. Why retail traders get it wrong and why retail traders lose is they don't know where the currency's going, so they bail on the trade as soon as it starts to move back on them. Retracements are part of the deal, folks. If you're not planning on the retracement, you're not a trader. You're still gambling. And if you're still gambling, go to Las Vegas. Don't try to trade. All right, so we really, really want that Euro New Zealand. All right, and then the last one we want is the Pound New Zealand. And we will take the Aussie Swissy, but it's a little ways away from happening, okay? So Pound New Zealand up to the top of the channel right there. You can see it. All right, so now we're going to take it down a little lower to the 60. Here we are. If we make the turn on the 60, all right, here's the trade. Can everybody see the opportunity? Why do we have the lines on the chart? There's a 1270 fib. Do you think they knew it? Yes. What if you didn't have the 1270 fib on there? Then you didn't know that is there. And if you made a trade right into there, here, you lost. If you made a trade right into here, you lost. Right? Because you didn't know where that was. Your job is to put that on. Yeah, but it's a line on the chart, man. Why do you want to do that? Because we want to know where we can trade. When we don't need to know where we can't trade. Right? So we're here at the top. We've got a former PSR right here. We got a top of a channel. The trade is to the downside right there. All right, that's our trade. All right, we're here at the heart line. That's the heart line right there. All right? A trade to the downside, and we have an opportunity for 1, 2, 3, 4. This target's already out. 5, 6, at least 6 T30s or 180 pips. Anybody interested in that? 180 pips. Wow. All right, here we are. Can you see me now? Sound like a commercial I've heard once before. Okay. See this. Okay. All right. Thank you. Thank you, Pip. All right. We can see me now, and the idea is, can we see me drawing? All right. It's a little slow. Yeah, it is slow. So I'll just slow my voice down a little bit. All right. How about that? All right. We're here on the Pound New Zealand. All right. Here is an opportunity. All right. Your job as a trader is to always find the opportunity and then wait for the opportunity to come to you. Don't go manufacture a trade. Don't sit there in the charts and say, I think it's going up. I think it's going down. Your thinker is what gets you in trouble. All right. You follow what the charts say, but your job is to make the charts talk to you. All right. So we've come off the bottom of the channel to the top of the channel. All right? We're looking for a trade down again to the bottom of the channel. That's what we're looking for right there. All right? Now, that's about 1, 2, 3, 4, 5. It's 150 pips just to the bottom of the channel. All right? It's another 60 pips to the 1.618 target, which is the next target. All right? Now, here's why you need lines on your charts. If you didn't know the 1270 was here and you made a trade on this nice red candle here, you got stopped out. If you didn't know the 1270 was right here and you made a trade into the 1270, you just got stopped out. All right? So your job is to know that's on there. Well, that means you have to put it on there. That means you have to have a line. All right? So you have to have this on your charts. And it's the area where you have no lines is the area you can trade. It's the wide open space. And the reason retail traders are not successful is they don't do the work, don't know why to do the work, they don't know how to do the work, and they don't know how to get the lines on their charts, so they're only trading in the highest probability area for a retail trader to trade. A banker can trade anywhere because he doesn't trade with stops. You cannot. You have to trade with stops. All right. Something else we're seeing. We have an exhaustion wick on a 60-minute chart. That means they went up to find buyers and they didn't find any buyers. Well, that helps us in our position to make a decision about the sell. They didn't find buyers. Therefore, there can only be sellers. Let's see if they move to the downside. If they move to the downside, we're going to take the trade. All right? That's what the parameters tell us. So now we're down on the 10-minute chart. We did all that up on a 240 and a 60. All right? Now we're down on the 10-minute chart. And what are we looking for? We're looking for momentum to the downside. All right? What is momentum? You see they've made the turn. Everybody can see they've made the turn. Neon painted candles. Maybe we'll be lucky and get a white dot telling us we're going 55 pips. But no matter what we do, we got to break the support. So the break of the support with momentum becomes a trade setup. All right? You see that? That's how it works. So what do we got to do? Unless it does that, we do not have a trade. But if it does that, this is our initial opportunity, which is 1.5, 2, maybe 3, 100 pips. Anybody interested in that? I am. I'm interested today. I'm interested right now. I can't make it happen though, folks. If it happens, I'm going to make the trade. All right? That's how that works. And I'm not going to make the trade unless that does that. Discipline. Become a disciplined trader and you can make it. All right? Don't become a disciplined trader and you're not going to be able to do it. It's just that simple. All right? All right, so that's the opportunity, and that's very close to happening also. All right, so we're going to watch right now. The two big opportunities are on the pound New Zealand and on the euro New Zealand. All right, both of those have got a New Zealand in it, and they're both moving for whatever reason there is. All right, so we're looking for them for the opposite reasons, though. Isn't that incredible? All right, so this could very well be a sideways move or the pole. Everybody see that? That could be a pole for a move to the downside. So we really want this uptrade because we're still in an uptrend. But we've got to be open to the fact that this may not ever break up into here and may actually be a pull for a downside move. All right? Does everybody see that? Oh, we see I'm still on another back charts again. God, it's driving me nuts. Hold on. You think it's driving you nuts? It is driving me nuts. It's crazy.
It's not working.
No.
Why?
All right. Wow, it's really driving me crazy. All right, I'm going to say that again. You know what it looks like? I'm going to have to probably shut the charts down and pop them up every single time I move to the chart. That's what looks like it's happened. Don't ask me. That has never happened to us before. We've been using this room for about a year, and this has never happened before. So we are over here in Morgan's room, but we use the same room. So, all right, so let me pop this up again. All right, so you can see it. Hold on, I'm waiting. I'll wait, and I'll wait, and I'll wait, and I'll wait. This is nuts. Really crazy. No, that's not. That means that they're adding to the position. Right? But what they're adding to is because it's a great trade space. So let's say in a market, they pull up here and they get one trade. Then they take another trade here. They leave this one on. They get this one here, and then they get another one here. So they put all four of them in. This ends up being 150 pips. This one ends up being 130 pips. This one ends up being 90 pips, and this one ends up being 23 pips. And that's how it's being reported. You see that? All right, doggone it, it's driving me crazy. I wonder if I would change from region to monitor, if that would help. Let me try that. Okay, I'm back in again. We'll see if we can do this one more time. All right, I'm back up again, and I'm going to draw on the charts. You tell me. There we go. Can you see that? All right. So here's the issue that I was talking about. We're in the Euro New Zealand. You can see we have an uptrend. All right, we have an uptrend. All right, we're looking for this opportunity up here. All right, but we have a conflict here. All right, here's the conflict. This is a pole, sideways move, in a down move. All right, it could certainly be going to the downside. All right, technical support has sent me an email. Okay. Yeah. Yeah. Okay, technical support. I can't even. There we go. That's how long. I typed a little bit ago, and it took forever. The lag just to get the chat to you was 14 seconds probably on a chat that should be almost instantaneous. I'm on a RAID server, 10 megabytes of RAM, 60 megabytes per second download speed, 6 upload speed, which is the fastest you can get. So, and we lag. Not only do we lag, we freeze. The screen freezes continuously. I've already changed the screen. Really crazy. All right. I know it's frustrating for you folks, and it is absolutely frustrating for me too. All right. So you know, we must be pounding the bandwidth. There must be so much bandwidth on here that it just can't keep up. I don't know what it is. So we'll see. Now we got 3 tech to support people here. All right. I don't know what they're doing behind the scenes, but hopefully it's working. All right. All right. So remember, our job is to wait for. We're looking for this trade right here. That's our trade. We got to take the support out. We got to get into this area right here. If we're not in this area, we cannot make the trade. All right. So there you go. Cannot make the trade unless we're here. What did it just do? It came down and bounced up. All right. This is why you don't make a trade until it proves it. Oh yeah, there's a red candle. I'm in. Oh man, I'm upside down. Oh no, it's going the wrong way. Oh, see, that's what happens to traders. Wait for your trade to come to you, but figure out where it's got, what it's got to do for you to make the trade, and then wait for that to happen. And it's different every day with every different piece of currency and every real estate there is. It's always different. All right. All right, so those are the 2 major ones there, plus the CJ. All right, CJ, we're looking to see if we get this, and we're very close, as you can see. All right, remember now, I've already talked about this at length. On the CJ, double your position here for the heartline minimum, for the channel over here, the next target, and all the way down to here. If you get it all, it's 1, 2, 3, 4. 4 T30s, 5, 150 pips. All right, and it's imminent right now. So we're going to wait and see if we get it. All right, waiting and see. All right, that's those over here. The other ones, the only ones over here are the New Zealand, all right, and the UJ. All right, so let's go take a look at the New Zealand real quick. Is it in position? No, not in position. All right, but we are trying to get across the desert here. All right, so you can see we're inside the desert here. It's a dangerous trade until we get down here. So we really won't probably have this trade. Advanced traders can trade this. They know how to trade that with the 6 aces, but the rest of you, you're going to have to wait till you get out of the desert. All right, and that's just a safety issue. Is there a trade there? There's a trade there, but you aren't ready for that trade. All right, that's the whole point. You're not ready. All right. So we'll see what happens here. All right. So technical support has theoretically left the room. So we'll see. Everybody hearing me and seeing me okay now? They must have done some throttling. Anybody? Hello? Okay, thank you, Morgan. Better. We'll see. All right, so over here to the UJ is the other opportunity here. And folks, I can't make a trade happen. I would love to. It's very close to happening here, all right? You know, if it happens, that's when you take it, all right? We've already determined we're going to sell this currency, all right? We're at 101.12. If we sell it here, want to break, hook, and go, we're going to, that's too dangerous because we can't get our stop move by 101. So here's what we want to do, all right? Here's what they want to do. we want it to come down and take the 101 out, bounce back up, and then go. Because once the 101 is out of the way for today, then we can trade it to here. All right, does everybody see that? So we're not going to jump on this the minute it moves. All right, it's all set to go. All right, we're below the moving average here. We got our blackjack, moving average red, candles below the moving average, HMI, check, we're good to go. We got an arrow and a painted candle, check, we're good to go. So we have a trade set up, but we don't have a trade. All right, now this is really important for you to understand because retail traders think a trade setup is a trade. It's not. They have a trade setup that says things are in place for this to make the move. What are the barriers for that to happen? The 101 even number. Right? It's a psychological number. So what we want the market to do is go down and take the 101 out and say, you're not a problem for me. Then wait for the hook back and take that trade. Now, does that make sense to people? You got to see that. Now, we know where it's going. Why? Because we have a line on our chart. I'll show you how we get the lines if we can never get through this, all right? That line is a previous resistance from the past, which is now support. It becomes the target. The space in between is the wide open space. And that is where we're going to trade, in the wide open space. When we break this wide open space here, we can then measure to here and see how far that is, 46 to 71. So you get about 25 pips, all right? So we're looking for that opportunity, which will be very, very difficult, but it depends on the real estate of the day. If they take this out, bounce up about 10 pips, and then go, then it's perfect. Okay, if it just stays here, it's going to be difficult because it's only 25 pips. But the break of this line at 101 takes out to 150. We're below here, and we now have a target that is even lower, all the way down to 99.94. So the total potential of this trade, when it happens, should it happen, is down here, at least to here, and we may get a continuation of the day chart trend. All right? So how far is that? This opportunity is 1, 2, 3, 4 T30s, and maybe 5. So there's 120 pips here. All right? But how you trade it is based on the real estate of the day. Okay? So now, pip, you might, I think it's if they're enabled. Does that make sense for everybody? Does everybody see that? Does that make sense for everybody? Oh, doggone it. I'm not sure. You're not seeing it. Doggone it. All right. Where's tech support? Okay, I have drawn on this chart tech support, and there's not being shown. Now, it just showed up. Now, I drew that a minute and a half, 2 minutes ago. All right. That's a little crazy. All right. So, now, let me go through this again. All right. Break, take the 101 out. That creates the bounce back up, which is a break hook. Then we look for the go. The go is to here. Everybody see that? That's where the go is to the first line. I'm going through it slowly right now. All right. Yeah, good. There's 120 pips down to this target, which is the 382 fib from the big picture. Well, it's not my room face. It's Morgan's room, but you know, normally it works fine. We usually run 2,000 people in here all the time. So it's a drawing tool that freezes the screen. So, no problem. I need to draw so you can see it. How long is the trade value? Until it doesn't. Until we go the other way. We go away from here. See that? So that's why. I'm on Internet Explorer room support. That's what I'm doing is Internet Explorer. Okay. So. All right. So what you do? It's a missed opportunity. All right. It's a great. By the way, that's a great question. Allah, however you pronounce that. Okay. That's a great question. If the currency just takes off and goes, we can't drop in it. That's chasing a trade. Every time it takes off, if you want to jump in that, think of yourself as the dog chasing the car. The dog will only catch the car once. All right? The broker's job is to put you in as soon as he can. When will that be? At the bottom of this candle. There it goes, I'm in. Oh, yeah, I'm in. Now, what's next? Retracement. Oh, no. What if it's a false breakout? Oh, no, now I get stopped out. You see? There's very little good that can happen from chasing a candle that takes off. Very little. Every once in a while you get lucky and the second candle goes and you make pips. Every once in a while. All right? But the market will retrace well over 95% of the time. It's pretty close to 99%. Okay? So we always wait for the first break and hook and go.